Mark Zuckerberg is now prioritizing artificial intelligence as opposed to the metaverse, which was really what he was focused on last year. The multiomics companies like Exact Sciences are using their own proprietary data and their broad distribution networks to gather information and create better products and services. These economic statistics that take all the oxygen out of the room are hugely lagging, and they're not even getting it right. We know they're going to come to a deal.
Hello and welcome to Crypto Street. In this video, we have the privilege of featuring Cathie Wood, the CEO of ARK Invest, who will share her insights on AI investments and the U.S. economy. Today, we will delve into the secrets of the future of Bitcoin. But before we dive in, let's take a look at the latest developments in the cryptocurrency market. The recent gains in Bitcoin have emerged amidst cautious optimism about the U.S. averting a default following a tentative debt deal over the weekend. Now, without further ado, let's begin our enlightening discussion with Cathie Wood.
Well, for Google, GPT was either the worst thing that has ever happened to it or maybe the best thing. We tend to think it's going to be disintermediated, though, by GPT and other chatbots. So we're not going to need the kind of search and therefore advertising that drives Google's model. So we do worry about that one. And as you said, Apple, there are many people who think that even Amazon is going to be disrupted not only by social commerce, so people just shopping through Instagram and other social media sites, Pinterest, but it also could be disintermediated as if consumers use GPT and other AI tools to say, I want exactly this kind of item at the cheapest price anywhere in the world. And it would go directly to that source. So, any platform that has served as, an intermediary is at risk, we would say. So Meta is interesting to us. We do like what it is doing. We love its sophistication and the fact that Mark Zuckerberg is now prioritizing artificial intelligence as opposed to the metaverse, which was really what he was focused on last year. So yes, we're interested in Meta's play here. We don't have it in the flagship portfolio. We do have it in other portfolios. No, Twilio would be another name. Almost every company except for, actually even including.
Bitcoin markets kicked off the March 29th trading session with modest gains as traders aimed for stability above the key psychological level of $28,000. One encouraging factor for crypto bulls is the continuous decrease in Bitcoin supply due to steadfast long-term investors holding on to their assets. Glassnode's HODLed and lost coins metric has reached its highest level since May 2018. Now let's delve into Bitcoin's technical analysis. From a technical standpoint, Bitcoin appears primed for a short-term correction toward the $25,000 mark. Notably, the BTC price has been consolidating within a descending triangle range since March 23rd. On May 29th, it tested the upper trend line of the range as resistance and experienced a subsequent drop. This pullback could continue until the price reaches the lower trend line, approximately around $26,500. However, considering the ascending triangle's formation following a strong market uptrend, Bitcoin's overall bias leans towards the upside according to the principles of technical analysis. But since the ascending triangle appears after a strong market uptrend, Bitcoin's overall bias looks skewed to the upside, per the rule of technical analysis. Therefore, should the price break above the upper trend line, it could grow by as much as the triangle's maximum height. Therefore, if the price manages to break above the upper trend line, it could potentially rise by the maximum height of the triangle. This sets the stage for a possible rally to $31,000 in June, indicating a 10% increase from the current price level. Now let's return to our discussion with Cathie Wood and delve into the U.S. debt impasse.
The multiomics companies like Exact Sciences are using their own proprietary data and their broad distribution networks to gather information and create better products and services. So I would say almost every company that we have in the portfolio is in some way, shape, or form. We ask the question, how are you harnessing this powerful tool called artificial intelligence? And I would say 90% of the names in the portfolio are harnessing it and do have proprietary data. With our 5-year investment time horizon and having been around this block a number of times, we know they're going to come to a deal. They are not going to deprive government employees of their paychecks, Social Security, so retirees of their paychecks. It'd be politically disastrous as we're heading into this election year, and already the field has heated up so significantly. So they're going to get through this. It's a very short-term phenomenon. It might be a short-term fix. And hopefully they do get serious about this at some point in time, but we don't think now is the time.
President Joe Biden and House Speaker Kevin McCarthy have reached an agreement to raise the U.S.'s borrowing limits, confirming their commitment to preventing a potential government cash shortage by June 1st. His affirmation follows Treasury Secretary Janet Yellen's warning about the consequences of failing to raise the limit. Interestingly, this news has weakened the U.S. dollar, which had previously strengthened due to its perceived safe haven status. The U.S. dollar index, DXY, initially dropped by 0.25% in early morning trade, but later recovered its losses. Bitcoin, on the other hand, typically exhibits an inverse relationship with the U.S. dollar. This long-term negative correlation may have contributed to Bitcoin's price increase as the greenback declined against major foreign currencies. However, it is important to note that a decisive debt deal is viewed as long-term bearish for Bitcoin. This is because such an agreement could potentially remove around $1 trillion worth of liquidity from the market, creating concerns among investors.
When history books are written, we'll look back at this period and we'll see the sharp rise in inflation, which was caused by massive supply chain, really supply shocks from COVID and the war in Ukraine. And you will see, so sharp increase, and it feels like it's so slowly coming down. But when you start looking at these charts in history, this decline will look very like it was very rapid, and we will descend into deflationary territory. Don Luswin wrote a piece, it was an editorial in the Wall Street Journal, I believe, about this. And I think the Fed is going to be blamed for sending us into a deflationary period. Already we're getting negative signs for guidance. Home Depot, its same-store sales down 3 to 5% for the year now they're expecting. We got GDI, which is the other side, so gross domestic income, which is the other side of gross domestic product. And they need to equal, but they're at a record gap right now. It's been negative, so in recession territory for the last 2 quarters. And I think many companies are going to feel a hard landing, and it's going to come both from units and prices. I think more and more companies are reporting this on their earnings report. These economic statistics that take all the oxygen out of the room are hugely lagging, and they're not even getting it right. If you look at the digital world, gross domestic product that statistic was devised in the industrial age. We're in the digital age right now. Yeah. So we pay more attention to gross domestic income, which tends to be more accurate as we're seeing these inconsistencies.
Thank you for watching. We appreciate your support and engagement. We value your insights on the future direction of the world of cryptocurrencies. Don't forget to like this video and subscribe to our channel for more engaging content.